Welcome to Market Brief After Hours, the podcast where we unpack the day's biggest financial stories and what they mean for your portfolio. Today, we are looking at a market that is absolutely shrugging off geopolitical tensions. We've got U.S. equities extending their record run, a massive surge in UK economic growth, and a dramatic collapse in cocoa prices that is sending shockwaves through the chocolate industry. To make sense of all this, it is time to dive into the numbers. Let's start right across the Atlantic. The U.S. indices are just relentless right now, aren't they?
They really are. It's a fascinating dynamic because we are seeing these record highs despite some underlying economic fragility. The sentiment is heavily supported by the belief that diplomatic progress might ease the current geopolitical risks, allowing investors to focus purely on momentum.
Let's get right into the specifics of those U.S. numbers. I know the S&P 500 crossed a major milestone recently. Where did the major indices land today?
The momentum is undeniable. Looking at the Dow Jones Industrial Average, it added 115 points, which is a 0.24% gain, to close at 48,579. That pushes its weekly gain to over 1%. Then you have the S&P 500. It rose 0.26% to finish at a fresh all-time high of 7,041. It has now gained 3.3% just this week, completely erasing any losses we saw immediately following the start of the Iran war.
And the Nasdaq? It feels like the technology sector just cannot be stopped right now.
Exactly. The Nasdaq Composite advanced 0.36% to close at 24,103. What is really incredible here is that this marks its 12th consecutive positive session. That is the longest winning run for the Nasdaq since 2009. It is up 5.2% this week alone, heavily driven by strong momentum in growth in semiconductor stocks.
That tech momentum is staggering. But let's cross over to Europe, where the picture is a bit more mixed. We had some really strong growth data out of the UK today. How did the European markets digest that?
The UK GDP data was definitely the bright spot of the session. The UK economy grew by 0.5% in February, which is its strongest monthly expansion since January 2024. This helped support the UK's FTSE 100, which rose 0.26%. However, it wasn't a perfect picture, as UK manufacturing output actually slipped by 0.1%.
How did the rest of the continent fare in comparison?
It was quite a mixed bag across the board. Germany's DAX was the outperformer, gaining 0.36% to reach 24,154. But elsewhere, things were fairly flat or slightly negative. The French CAC 40 saw a minor decline of 0.02%, Italy's FTSE MIB fell 0.27%, and Switzerland's SMI dropped 0.35%. Overall, the broader European Stoxx 600 index edged down less than 0.1%.
There is also some concerning news regarding inflation and energy in Europe, right? The situation in the Middle East seems to be spilling over into the economic data.
Yes, that is the dark cloud hanging over the European markets right now. Eurozone inflation for March was revised up to 2.6% year-on-year. That is higher than the preliminary estimate of 2.5% and a significant jump from February's 1.9%. The main culprit driving that inflation is a 5.1% surge in energy costs. Add to that a very stark warning from the IEA today. Europe could face a potential jet fuel shortage within 6 weeks because of the ongoing blockade in the Strait of Hormuz.
That energy bottleneck is definitely showing up in oil prices. Brent crude is knocking on the door of $100 a barrel.
It is getting very close. Brent crude jumped 3.42% to settle at $98.16 a barrel today, while WTI gained 2.36% to reach $93.44. With tanker traffic through the Strait of Hormuz severely limited and no clear timeline for a full reopening, the supply side is incredibly tight, and the markets are pricing in that risk.
While oil is surging, another major commodity is absolutely crashing. Let's talk about cocoa. What exactly is happening there?
It is a dramatic collapse. Cocoa prices fell another 0.72% today to $3,537.28 per ton. To put that in perspective, prices are now down 41.6% since the start of the year, and down an astonishing 57.6% over the last 12 months. It is a massive shift in the dynamics of global soft commodities.
We need to talk about how that cocoa crash is impacting the big chocolate makers. And we also have a lot of ground to cover with today's Forex movements and individual stock movers. But first, a quick word from our sponsors. Welcome back to Market Brief After Hours. Before the break, we were discussing the massive drop in cocoa prices. How is this impacting the major industry players?
It is hitting them incredibly hard. Callebaut, which is the world's biggest chocolate maker, actually issued a major profit warning today. They cited the falling cocoa prices, supply concerns, and general industry overcapacity. As a result, their shares plummeted by as much as 14%.
That is a massive hit for a company of that size. Speaking of hits, let's look at the U.S. labor market and industrial output. We had some mixed signals today that seem to contradict the stock market's optimism.
Very mixed. On one hand, initial jobless claims dropped by 11,000 to 207,000, which beat expectations for 215,000 and shows the labor market is still broadly stable. But continuing claims rose by 31,000 to 1.82 million. Meanwhile, U.S. industrial production fell 0.5% in March. Manufacturing, utilities, and mining were all down, pointing to softening underlying industrial momentum. This data, combined with President Trump's renewed criticism of Federal Reserve Chair Jerome Powell, pushed Treasury yields higher. The 10-year note rose more than 3 basis points to 4.311%.
Let's pivot to the foreign exchange markets. There was a lot of technical action today, particularly with the major currency pairs testing some key moving averages. Let's start with the euro against the dollar.
The Euro/USD pair faced a clear rejection above the 1.1800 psychological level today. It closed down 0.15% at 1.1781. The price action left a visible upper wick, which suggests near-term selling pressure is emerging. However, the medium-term trend is still supportive because the pair is holding above its key moving averages. The 50-day simple moving average at 1.1673, the 100-day at 1.1699, and the 200-day, which is also at 1.1673. Immediate resistance is at 1.1823, and if it breaks below the 1.1767 support, we could see it test that moving average cluster.
What about the British pound? Did the strong UK GDP data help the GBP USD pair?
It tried to, but ultimately the pair pulled back after facing heavy resistance near the 1.3600 barrier. It closed down 0.24% at 1.3527. Like the euro, it is still trading above its moving averages, the 50-day at 1.3427, the 100-day at 1.3444, and the 200-day at 1.3413. The outlook remains constructive, but this pullback shows some short-term exhaustion after the recent rally. Support is currently located at 1.3516.
And the dollar against the Swiss franc?
USD CHF edged higher, up 0.26% to close at 0.7832. It is currently testing its 50-day moving average at 0.7824. But the broader trend is still bearish because it remains below the 100-day SMA at 0.7873 and the 200-day at 0.7937. Upside attempts just aren't finding follow-through right now.
The yen has been a major focus lately. Is the uptrend for USD JPY still intact?
Absolutely. USD JPY held firm near its highs, closing up 0.13% at 159.15. Buyers keep stepping in on any dips toward the mid-158 region. The pair is trading comfortably above its 50-day SMA at 157.54, the 100-day at 156.91, and the 200-day at 153.36. It is sitting right below that massive 160.00 resistance level, which continues to cap recent advances.
Let's quickly touch on Euro GBP and gold before we move to individual stocks.
Euro GBP is incredibly range-bound. It closed up slightly at 0.8707, but it is just oscillating right around its moving averages. The 50-day is at 0.8690, the 100-day is 0.8699, and the 200-day is 0.8700. They are all converging, which shows a total lack of clear directional bias. As for gold, it closed steady at $4,795, up just 0.09%. The corrective phase is still active because it remains below its 50-day SMA of $4,896, though it is holding above the 100-day at $4,691 and the 200-day at $4,183.
That is a fantastic technical breakdown. Finally, let's wrap up with the individual market movers. We already mentioned Barry Callebaut's 14% plunge, but there was some massive action in the semiconductor space today.
Yes, semiconductors had a banner day. Advanced Micro Devices, or AMD, surged 8% after Bernstein raised its price target to $265, citing really robust demand for server CPUs. Intel also caught a bid, gaining 5% following a price target hike to $60. It really reflects the broader strength and momentum we're seeing in the technology sector.
Were there any other standout movers today?
Hims & Hers Health was a big winner, rallying 10% after U.S. health officials made optimistic comments about potentially removing restrictions on certain peptides. On the downside, Charles Schwab fell 7%. They actually launched new Bitcoin and Ether trading services, but that news was completely overshadowed because their first quarter revenue missed analyst estimates. And Abbott Laboratories dropped 6% after issuing a pretty disappointing profit outlook for the second quarter and the full year.
It sounds like we are looking at a market that is advancing on pure sentiment and tech momentum, but underneath the surface, there is definitely some fragility. With energy risks in the Middle East and mixed economic signals, the next phase for the markets will really depend on whether global growth can hold up against these geopolitical headwinds.
That is the critical takeaway. Record highs suggest confidence is firmly intact, but the divergence between resilient equity markets and softening industrial activity highlights a much more uneven economic landscape going forward.
We will be watching it all closely as it develops. Thank you for breaking down all these moving parts and providing such great insight. If you find this useful, please follow Market Brief After Hours. We will see you next time.